We were winding up on Elimu Bora Academy, the statement of financial position, and we had gotten the current liabilities. We have creditors, 17,000. Then we have the unpaid operation expenses, the year 15. So 17, you add 15, that will give us 32,000. We have the 32,000. So our current asset minus the current liabilities is supposed to be a deduction. So I can put it in the bracket. This will give us, let me close that bracket. So 358 minus, supposed to be 32. 358 minus 32 is giving us 326. 326,000. Again, this will be a deduction, so that we get the, not a deduction, gotten. So to get our net assets will be equal to convert this into money, equal to 1445. We add the 326,000, so that will give us 1771. So this should be our balancing figure. Let me underline it. So we can now go to the credit side of the statement of the financial position. And here we normally get the capital balances, the capital balances and any provisions. So capital plus any provisions. So we had a capital. Our capital was capital. So to look in the question, our capital was 1.2. Is it 1.2? Then I add any other balances that we had. So we had the fund balances for, we had the building fund and the bursary fund, isn't it? Let me just annotate them under a subheading funds balances, so that I classify them into, we had a building fund. The building fund was 121,000. Then I have a bursary fund. Remember the other bursary fund, right? It's an investment, and therefore it will increase our capital. It's an investment of 110,000. Anything else? Then we have now the surplus fund. So this is a surplus fund for the year. Our surplus fund is 130,000. Let me just call it the balance, the income. Let me just pick this to avoid confusion. But it's a surplus, right? That amount was 130,000. Then we go to the provisions. We had provisions. I can add these three. There is no any other fund. This gives me 361. We had that provision for extension and improvement, right? We had that provision. it was increased from 120 to 210. So I'm going to pick the 210 because this is a total provision. So allow me to copy that in the interest of time. So this will give me 210. I think that's all. So we total that, it's balancing. Just copy paste this. Not sure whether it will allow, cannot. Let me just put another formula. This plus this plus this. So our books are balancing at 1,771,000. So essentially, we've agreed that the institutions that are not for profit making, they will prepare an income and expenditure account, basically to monitor the operations. So we don't have a trading account, reason being they are not for trading purposes. You say the need here is to improve the lives of the people in the society, and if anything, empower them socioeconomically. But we need to track the performance, because we don't want again to be in a sink fund. Even if you are running a charitable organization, you wouldn't want it to be run down. So I want us quickly to look at the hospitals. Hospitals will also fall in that category. So allow me to stop sharing. Increase the font. Don't intend to take a lot of. I'm saying also hospitals, they are not for profit making entities. And therefore, a trading account will not be prepared equally. What we'll do is try to monitor the incomes and the expenditure items to again ensure that hospitals are not run down. Since time immemorial, when the colonizers were coming to Kenya, you know, the avenue that they were using to attract people to their religion was hospitals. It is even said that some of the diseases, like scabies, were brought by the colonizers. And the objective was, when people suffer, they will seek for medical attention, and while at it, the colonizers will be able now to pass the good news. So hospitals are not for profit making bodies. The reason why we are studying these books, you might find yourself working in a hospital, and as an accountant, you need to prepare the books, or you are the finance director, let's say. How will you ensure that the hospital operations are tracked? You want to ensure that every cost that goes with running the hospital or offering the services to the patient is well tracked. Bookkeeping is the solution. So the principal sources of revenue to hospitals are you got patient fees, consultation fee that they pay at the triage before they see the doctor. We have the hospital boarding fees for those hospitals that have bed facilities or boarding facilities. You might be sent to the lab to do some tests, etc. Then we have the pharmacy, which is key. So pharmacy will be dispensing the drugs at a cost. So the proceeds from the sale of drugs will also be an income generating sort of an activity for the hospital. Then we might receive grants from the sponsors, the government, if they are government-run hospitals, the level 1, 2, 3, up to 5. We have the room and bed rents for those who are going to overstay. And this normally happens if you have a sick person and you are the person taking care of them, you might not put up at the same bed with the patient. So what the hospital will do is to arrange for some bed rents for you as you support your patient. Food charges, there are meals that you are taking, medical care that are happening when you are online. Good example is when you are taken to the hospital with an emergency, they will not start asking for consultation fee, especially in the eve of Corona, where someone can easily collapse and die. So when you are rushed to the hospital, the first thing is to give you first aid. And it is a law. No hospital is supposed to deny any patient. It is a right in the Constitution to access medical care. Kesi baadaye. So they'll take care of you to ensure that they resuscitate you and you don't die. And then the other general procedures of the hospital will follow. So all these are cost centers. And what cost centers do, they will organize their cost and expenditure items in a manner that will be presentable to show that we are tracking our costs and expenses. And this is now what the accountant will amalgamate when they are preparing the income and expenditure and they are on the balance sheet as at a given date. So for better control, the departmental accounts need to be prepared separately. So each of the head of the center is supposed to track or control the expenditure expenditure items. Now, this should be now at the end of the period. They are supposed now to bring together the separate ledgers because they need now to show overall how is the facility or the hospital being run. So again, a trading account will not be prepared because what we are doing is to offer health services. We are not in the business of trading drugs or trading health. We said we are in the business of offering, and even what the doctors are paid is not called a salary. Doctors or the medics, whatever they attract as compensation, we call it through, or we name it honorarium. Is an honor because of the services that they have offered to ensure that the life was not lost. We honor them. So that is called honorarium. So adjustments will be made on any accrued income. Remember, being in the presentation of the final accounts, we normally say the International Accounting Standard ones. It provides for all the business firms, more so the limited companies, they are supposed to present their financial statements on accrual basis, except the cash flow statement, because you cannot accrue cash, you have to receive it. So I've shared the practical examples. I have a case here from Matibabu Bora Mission Charitable Hospital. And from this data, we've been asked to prepare an income and expenditure account, and thereafter a balance sheet. So we have the receipts and the payments. And you can see we have some balances that we are bringing forward. Yeah. Then we have subscriptions. Subscriptions is what you, for a charitable organization, maybe the donor will be giving some amount of money every, let's say every quarter of the year. So when you are talking of the subscriptions, some are run by some membership organizations. So when the members subscribe, now these receipts will be recorded. Donations, any interest on investment, name it. Then we go to the payment side. We have the medicines, doctors' honorarium. This is what I was talking about. We go salaries. Salaries will be for the other support staff, like the reception clerks. We have the janitors, those people who are cleaning the hospital, etc. Then, of course, we have the petty expenses. In a hospital, of course, being an institution that is running day-to-day activities, you expect people are taking tea here and there, people are sending mails, people are sending parcels, etc. Then, of course, they are going to procure equipment to be run or to be used in the hospital, etc. Then we've been given additional information. So I have the prepayments and I have the accounts owing. So we'll be using the accrual basis. So let's see when we get there. I think that's all. Try to minimize this question to see whether it will fit on one page. So I'm hoping you have opened the question on your end. So what we need to do, we need to do the adjustment. The reason why you are giving any additional information in a question, you should always remember you are sticking to the conventions of financial accounting. So you still need to adjust the relevant ledgers before you prepare the final books of accounts. Like you've been given the subscriptions. So we had the subscriptions that are in the statements, the 47,996, and this is the figure that we need to adjust to know the subscriptions that will be there, or the subscriptions that will be related to this particular year of operation. So allow me to go back to the Excel. I can use sheet 2. And delete what is there on. There we are. So I've said we need to first adjust all the accounts that have been given in the additional information. So the first one is the subscription. I need to open another sheet. Seems that one is good. So you start by adjusting the, so I'll call this, I can call it working one. Hope you've gone through the question so that we go together. So the item that we are adjusting here are the subscriptions. Let me just write subscriptions. These are hospital, so subscriptions. So I'll start with the subscriptions that you have the subscriptions. So I'll keep on going back to the question. So I have the subscriptions that were received during the year, and they are amounting to 47,996, right? This amount is in shillings, so that I can convert this into money. So those were the subscriptions received during the year. Received, let me just write, received during the year. Then from there, I have now the outstanding. So I'm going to add, we have the outstanding. So the figure for the outstanding as at 31st December 2020, we have an outstanding of 280. Confirm that. Then I'm going to add what was received in advance, right? So I add received in advance. And what was received in advance is 64, right? I'm adding, so it should appear there. So I have 64, so I can add these 3. Before I deduct the outstanding on first. So I'm getting 48,340. So this 48,340, I'll need now to add, no, to less the subscriptions that were outstanding, right? When we are preparing our books of accounts. And then I'll be also deducting what we have received in advance for this particular year because it doesn't relate to this period, right? I can just copy this. And amend, save on time. So remember we are deducting. So I less any outstanding or the subscriptions outstanding on 1st January. Because it doesn't belong, you are to use, we are adopting the accrual basis. Then we have the received in advance, mark the date, on 31st December 2020. So I'll check these figures. So the subscriptions that were outstanding as of January were 240. These are minus, so put it in bracket. And then what was received in advance as at 31st December 2020 was 100. Again, we are deducting, so I put that amount in bracket. So what I'm going to get now is the subscription for this year, right? The subscription for the year. Subscription related to this year. Just say related to the year. That will be equal to this plus this, because it's a minus, plus this. So I'm getting 48,000. So this is the figure that will be taken to our income and expenditure, right? We go on. Then you've been given the other item that we need to adjust is the medicine consumed. We have the purchase during the, we have the opening stock. We have what was purchased during the year. So you need to adjust. Let me have to keep on going back to the question. I'm trying to minimize them to read from the same page, but my system is, don't know. Yeah, so I have the stock of medicine. Let me call this working two. I just call it working two. So we are looking for the medicines consumed, right? Medicines consumed. So I have the opening stock. Opening stock OS. Let me just clarify is for medicine. The opening stock is 8810. That is on 1st January 2020. Then I have purchased during the year. What was purchased during the year? Purchased during the year. It's like we are looking for the cost of sales, opening stock plus purchases, we less the closing stock. What was purchased during the year is 30,590. Have that figure. Then I have the stock, the closing stock. So I less the closing stock. Let me just say less closing stock. Now my closing stock is 9740. I can put this in bracket. So my closing stock is that. So I'm getting 29,660. 29,660. So I think we have now the medicines consumed. They are there. Then we have the equipment and we have the building, right? We can work on the equipment. Working grid. So equipment. We just use EQPT for equipment, right? So we have we want to know the depreciation because we've been given the on cost and we've been given the value or the net book value as at the close of the period. And remember also in the general information, we have what was purchased during the year. I have an equipment that was purchased at 15,000, right? So I'll have equipment on, let me just write, equipment on 1st January. The value of the equipment on 1st January is 21,200. Then I have purchased during the year. Purchased during the year. Purchased. So the equipment that was purchased during the year is going for 15,000, right? So this will give me, let me add them. 21,200 plus 15,000. I'm getting 36,200, right? Then on 31st December 2020, we've been given the net book value or the closing stock of that equipment. So if I less, I should get the equipment that was all the depreciation for this equipment for the entire year. So I'm going to less the value of the equipment on 31st December. The value of the equipment on 31st December is 31,600, which means the difference will be my depreciation for the year. So depreciation indicated here, equipment depreciation. So this will be equal to 36 minus that. So this is the depreciation for the equipment in the year ending 31st December 2020. Now building, I have the building less depreciation. Now that one will go to the statement of financial position. I don't think that's a big deal. What we may need to also account for is the capital fund, but with the information that we have right now, we can prepare the statement of the financial statement of comprehensive income, or rather the income and expenditure statement, right? I'm trying to see whether there is any item that we have left. There is none. So let's use this side for purposes of transferring this. Can use 3 columns. So this is my income and expenditure statement. And I'll have my figures here in shillings. So these two columns, I want to convert them into money. So I'll start with the incomes, and then I go to the expenditure items. So this is income. So in the income, I have the subscriptions related to this year. As an accounting student, we are supposed to write subscriptions. Let me show you how you're supposed to do it. We say subscriptions working one. So that it gives me now an easier, when we are marking, I'll go to the item and see that our subscription is 48,000, right? Accountants are supposed to follow some logical sequence. Then from there, I go back now to my books to see the incomes. I see donations there. So donations are 14.5. Then I can see interest on investment. So remember, this figure is very important. We've been told it's 7%. So when we'll be going to the balance sheet or the statement of financial position, we are going now to get the 100%. So here our interest on investment is 7,000. Then I have proceeds from investments. And the proceeds are 10,450. I'm trying to scroll through to see whether I have any other income item. Not really. So I go to the expenditure. I can leave 2 lines just in case I get any. So we go to the expenditure. Same conventions of financial accounting 1 and 2. So we have the expenditure items. The first one is medicines consumed. I can put this here. That's why we were looking for it. But now my working tool should be appearing on this end. So you can see how orderly our work can be. Our expenditure, let's use the first column, is 29,660 medicine consumed. Then from there, the other expenditure is the doctor's honorarium. I say this is the fees the doctors are paid, the 9,000. Then I have salaries for the other employees, and the salaries are 27,500. Then I have petty expenses, and my petty expenses is 461. Then I have expenses on charity show. Expenses on charity show. Remember, you've seen these clinics, like the ones that are organized by Lions Eye Hospital, the current hospital, etc. They might charge, let's say they are doing the dental, it's a dental clinic. They'll tell you, instead of visiting a dentist, we are going to charge you only a fee of 200. then we do you a dental checkup. Not everyone will go for a dental checkup to the hospital, but when it is brought closer, people might turn up. So the amount that they are able to collect could be now be put here as an income. And of course, they are going to incur expenses because we have those people who are using the equipment to check them, be using the scapulas and the spoons that are normally used to check your mouth. There are some pieces of wood which might cost some amount. So in this case, they spent 750, right? Then we have the depreciation on equipment. So depreciation on equipment. Our depreciation on equipment gave us 46. I'll put there 46 and just indicate here working 3. Working 3. Then I have the depreciation on building. Depreciation on building. What's the depreciation on building? Depreciation on building 40, 38. So this will be 2,000. Then I have the, is that all? Trying to scroll through to see whether I have anything else. Like that's everything. So my, let's see. My total here is 79,950. 950. Then my total here is 73,971. 73,971. So this amount is supposed to be in bracket because we are deducting the income from the expenditure, and the figure that we are going to get down there, that will be our figure for the either surplus or deficit. In this case, we have a surplus of 59.79. So 59.79. 59.79 is the figure that we are going to take to the statement of financial income. So we have a surplus, or I just call it excess. Excess of income and expenditure, I and E. So that is our income statement. It's as simple as that. Then we need to prepare the statement of financial position, or rather the balance sheet, right? We can do it here. So I'll need 3 columns. So these are supposed to indicate it's for the year ended, and then let me just call it balance sheet. Balance sheet. Let me know the accounting is organic. So let us get use of the latest. The business language. So a language keeps on changing. It's like Sheng, keeps on changing, getting new jargons. So balance sheet, and our balance sheet is as at. Don't forget that, as at. We prepare balance sheet as at the end of the period. So I go on. I start with the what we call the shillings. Shillings. So we start with what we call the non-current assets, what we formerly used to call fixed assets. So I have buildings. We normally arrange them in what we call the order of permanency. So I had also equipment. So that I get the figures. So I have the original figure. Let me do it like an accountant. Let me have 3 rows. Just call this the NBV, net book value. So the second one will be for accumulated depreciation. The first one is the on cost. So our on cost for building was 40,000. Accumulated depreciation was 2,000. So the net book value is 38. For the equipment, the figures are here. So our on cost is I'm trying to get the on cost. Our on cost is 36,200. Our accumulated depreciation is 4,600. Therefore, our net book value is 31,600. So I've gotten that. After I get these figures, this is money, convert it to money. After we get that, the next item here is the what we call the intangible. Intangible assets are things like investment, goodwill, lease, etc. And intangible assets are not depreciated. What we normally do is to amortize. Things like goodwill are amortized, lease is amortized. Amortization is the loss in value. For instance, if you got a goodwill of, let's say, a lease, let me give an example of a lease. You're on a lease of 100,000 for 10 years. We could say each year is equivalent to 10,000. So every year we'll be reducing your lease by 10,000. I'm giving an example. So here we need to look at the investment. Our interest on investment is what will guide us. Our interest was 7. Let me just write it down here. We were in working number 3. I can have working number 4 for purposes of logical sequencing. So investment. And I say if 7% is equivalent to 7,000, what about 100%? I get 100%, cross multiply. 100% will be 100 over 7 multiplied by 7,000, right? This will give me 100,000, right? So I'm getting 100,000. So I'll come here and add my intangible assets. So investment. And my investment is 100,000. So it will go to the last column, 100,000. Allow me to scroll this back. So those are the assets that we have. Do I have any? I'm trying to see whether I have any other assets in that category. So we don't have. So I can go to the current assets, right? So go to the current assets. So the total of this, can even total this, 169,600. 600. I go to current assets. In the current assets, I have the stock of medicine. Remember, this was our working. Number 2, working 2. And the stock of medicine is 90. Stock of medicine. The stock of medicine. We're going to get now the figures that we are closing, 97.40. So the closing figure here is 97.40. Then from there I had the, now this where now we put the accruals and the prepayment, right? A prepayment is a current asset. An accrued income is also a current asset. So I have the dues, right? So I had the subscriptions dues. The subscription due as a 31st was, excuse me, 280. 280. Then from there I had cash in hand. Remember, we order current assets in order of liquidity, starting with the most illiquid to the most liquid. That's why I put the due before the cash in hand. A cash in hand is 37.75, right? I'm trying to see whether I have any other current asset. I don't see any other current assets, so I'll add this for now. 13,795. 13,795. Should be having this. Put it the wrong place. Here at the bottom. Money. So there we are, right? So with this figure, I'll need now to go to the current liability. Current liability. My current liability, I have the, in this category now, we are going to have the prepayment, or what we call the prepaid expense. Remember, in the revenue recognition concept, we are supposed to recognize expenses once we incur them, not when we receive money. So I have the subscriptions that were received in advance. So the in advance subscriptions, and we just write in short, in advance, the interest of time. My subscriptions in advance was 100. Don't even have any other, so I can just push it to the, and say I don't have any other. So this will be in brackets because I'm subtracting to get the net assets. Can cut this information and put them here so that I get the net assets. So this will be 13. 13,695. So 13,695, I add the 169,600. I'm going to get 183,295. 183,295. So that's the figure for my net assets. So this should be my balancing figure, right? Let me double underline. That's it. So what I need to have now is the capital fund, or what was financing our Matibabu hospital. And this one we need to accumulate this because we had not done it. I think we can do it. This will be working. You are in working number 4. So this will be our working number 5. So working number 5, I need to get what we call the capital fund. So I'll get all the items that I'm trying to scroll through the question to get the capital items, know what was driving my. So we can start with the assets, all assets, not necessarily classifying them. So I held buildings, my buildings, the value of building, the initial value, 40,000. This is what the owners, of course, we know that assets is what the owners will inject into the business. They had buildings, they had also invested in equipment. If you remember, if I was to revise to assets is equals to capital plus liabilities, right? So what I'm trying to get is the capital. So capital will be equal to assets minus liability. Remember the basic accounting equation. This is what we are trying to achieve here to get the capital fund. You put it in red. So our original equipment was valued at here 21,200. Figure is here 21,200. Then we have the investment. The owners were tying 100,000. And remember that figure pretty well. Then we have the subscription due. The current liability is a current asset. Subscription due. Our subscription due is 240. Then I have the stock of medicine, current asset. Stock of medicines. And the stock of medicine is, the original was 8810. This figure here, 8810. Then I have the cash in hand. Our cash in hand is a figure of cash in hand. The original was 7130, right? The original 7130. Our cash was 7130 at the start. The starting, anything else? Don't know whether we have left anything. This is 177,380. 177,380. Then I have the liabilities. The liabilities, we had only one, right? So I have the subscriptions that were received in advance. Subscriptions in advance. But remember, we are talking of the original. The very original one was 64. right? So this should be a deduction. Let me put it in the bracket. So what I'll get here is the figure for capital fund. So my capital fund is 177,316. 177,316. So I'll come here to the balance sheet or the statement of, don't want to forget that figure. Let me write it here, 177,316. So this is my capital. And then from the capital fund, we have to add the excess to see whether our account will balance. So the excess was 59.79. This is equal to, so we cross our fingers, plus this. Brilliant. It has balanced. Now I normally tell students, don't strain during the exam. What we mark are entries, right? So I'll be marking entries and I'll be interested in you knowing more so the adjustments. That is key. So don't try to balance. You can end up wasting a lot of time trying to adjust your figures to balance, unless you have completed your questions and you have some enough time to do the trial and error. But in most occasions, because of the examination, tension, and pressure, you might end up losing a lot of time trying to balance. So that's it. What I needed to emphasize is institutions and not-for-profit making entities do not have a trading account because they are meant to provide services, social services, more so, that touches on human life and their knowledge, or what we call the tacit part of the human being, their health and the tacit health. So their body health and the tacit health, which is now knowledge. So you cannot trade knowledge, you cannot trade health. That's why we are calling them not-for-profit making entity. So what the promoters aspire is to get back their amount. And of course, if they engage in some income generating activities, like a hospital will have a pharmacy. It's an equivalent of opening a chemist, but you are running it in the hospital to ensure that you provide the medication that the doctors have prescribed to the patient. So that's it. I'll post a question in the portal. I'll also post this working in the portal for purposes of your reference and the video. Enjoy your evening. Thank you.